So I wanted to do a quick little video this morning because it's been a really interesting presentation that I saw this morning, which was on the economic conditions and economic forecast for 2021, economic state of the economy for the Hampton Roads area, and it was presented by the Virginia Peninsula Chamber of Commerce, and it was the economics professor, applied economics at the University of Old Dominion. So ODU's economics department made this presentation, and it really talked a lot about all the things that were going on over the course of the last year and a half or so as we came through COVID, what happened to the economy when restrictions came into place and how much that affected the employment in the area and so forth, what sectors of the economy were affected the most. Very interesting to see that the Williamsburg area was so much more dramatically affected, particularly in hospitality and hotels and restaurants and things like that, as opposed to the Hampton Roads area. Now, a lot of that's based on the fact that the Hampton Roads area has a diversity to its economy that Williamsburg, and specifically the hospitality area and the tourism area of Williamsburg, has so much more reliance on that hospitality and hotel environment. And coming out of this COVID environment where the economy is opened back up again, what does that mean? Why are we going through this transition? What does that transition look like? And really, the word transition was used several times to kind of describe what's happening as this imbalance that has happened from the economic restrictions that were put into place. I mean, we shut down the economy a year and a half ago. It was actually just shut down completely. And then as things opened back up, there were employees that were able to get back to work. But we were still operating at 40% or so less than normal. What does that mean for housing? Really, for me and for a lot of people, it's kind of really intrigued with what does this mean for housing? And particularly lately, as we've seen this shooting up of home prices and prices of everything, and the core inflation that seems to be on everybody's mind and everybody's paying a lot of attention to. Inflation is definitely on the rise. There has been a spike of inflation that is being watched over the last few months. We see it in a lot of different places. It's real easy to see at the grocery store. It's real easy to see particularly at the gas pumps and so forth. Well, some of that was very temporary, supposedly temporary, with the pipeline shut down and how that affected things in the immediate area. But what does it mean for housing? What is happening with housing, and where is this bubble? What's going to happen with the bubble? And we make these comparisons to the recession of 2007 and 2008, which lasted for a very, very, very long time. In fact, one of the topics that was discussed today was the lost decade that took place in our economy from 2007 to 2019, just before the COVID-induced hangover recession that we went into. Because really, you got to remember, we're actually coming out of a huge recession. It was deep and it was really dark and it was fast, and that's what was caused by COVID. So as we come out of that recession, now we're seeing prices for everything going up. But if you compare it to the trend that was pre-COVID, the inflationary pressures that we're seeing now really aren't pushing it. By the way, this is Sound of Freedom here. Sound of Freedom is going right there. So the pre-COVID environment was actually lending towards a steady inflation, and the Fed is going to be watching inflation, but their goal is to achieve a full employment and get it to a certain level of employment while maintaining a 2% inflationary over time steady rate of growth. And we're right at that level at this point, even with the spike in inflation, which everybody's concerned about runaway inflation. We're at this level. So don't let me necessarily be the one that tells you what is going on with inflation and what the predictions are going to be, but these are some of the things that are being looked at and being watched. It's very interesting what it means to housing, because everybody is also seeming to wonder, where's the pressure on housing going to restrict? And what's kind of happened with housing is we already had a low inventory. So when we have a low inventory that we started with coming into 2020, coming out of 2019, that was started years ago. It actually started probably happening 10 years ago or more, as people have been living in their houses longer. There's been a tremendous reduction in new home construction. We've heard a lot about the reduction in new home construction, particularly at the lower end of the spectrum. And then so we have people that are staying in their homes longer. And now we've got multiple generations of buyers that are actually going towards the same type of housing. We have families or homes that are homeowners that have higher end homes that are downsizing or right sizing, and they are interested in selling their large homes. So we've got a lot of room for the move up markets. Well, guess what? The median home prices have been climbing significantly. We're looking at double-digit increases in median home prices. Does that mean everybody's home price has gone up? Arguably everybody's home price has gone up, but it's not the average. The average home price has not necessarily gone up by what the median home price has happened. What's happened is there's been so much of a great reduction of available inventory in these lower price points, whereas a majority of homes that are available to buy are coming into these higher price points. So there's a much higher, so that just moves the needle up in terms of the types of homes that are selling, and it puts a pressure on inventory, particularly in these lower price points. So below the $300,000 range is where there's so many buyers that want to get into those homes. Both the generation that's selling their larger home and the first-time home buyers are competing for the same pool of homes, and home builders are not able to build homes in that price range. Why are they not able to build homes in that price range? Because cost of building is so high. And that's why are cost of building so high? Right now, materials costs are so high, but the cost of building is really based on, and it starts with, how much does land cost? How much does it cost to make a development? What are the availability of these developments? And the communities that are here in the Hampton Roads area, the costs that a developer has to go through in order to actually implement a development, make the development so costly that they're not going to have a profit incentive or a economic incentive to build a home. In fact, they can't build a home that's going to be $250,000 or less. That home that they're going to build, they're going to build it for the market, and they want to sell it to where that market is. The profit is in the upper end of the market because the cost of the land is so high, the cost of the development, because the counties and the communities make it so difficult and costly to even put a development through production, that there's no way you're going to get $150,000 homes. They're just not going to exist. You can get the apartments, you can get apartment buildings and things like that are built in these cluster developments and things like that. Even those homes are not going to be typically in that lower end part of the spectrum. So there's going to be an ongoing pressure on inventory. We're going to see that for quite a long time. And so right now what's happened is that if you want to think about a supply curve, think about this as your graph. That supply curve, normally when prices start going up, you start seeing the supply curve shifting out, because people, as prices go up, they want to put their home on the market for sale. So more inventory is coming on. We are starting to see that a little bit. But what had happened is we had such a shift that the supply pushed beyond the scope of normal, and yet we had this demand that also had shifted. And so what happens when you have that supply that shifts and you have this demand that's shifting? So not only was the demand high, but the demand curve kept going out because people wanted to buy these homes. Now your prices have gone up. And they're there, and they're not going to come back down anytime soon. The inventory issue is going to be a long-term issue. I've been using the term of generational, because it is generational based on the aging population, the younger population, and this low inventory of new homes that's been constructed, and the compounding of people are staying in their homes longer. People are staying in their homes now for on average of 10 years or more, when before the Great Recession of 12, 15 years ago, not quite 15 years ago, but 2007, the average time in home was maybe 4 or 5 years. Prior to that, it had been about 7 years. So we shrunk down to a 4 or 5 year time in your home. Then after the recession, course, people had lost so much equity, they couldn't sell their homes, so they were staying in their homes so much longer. The average went from 10 years, probably even more like 11 years now, because we've gone through a whole year with COVID. So the average time of home ownership has extended almost double what it was pre-recession, and now it's even growing longer because people are concerned about, if I sell my home, where am I going to go? That's the biggest question that people have right now on their minds, is if I sell my home today, where am I going to go? I don't care, my home may be worth so much more. I might be able to sell my home for a lot more than I ever could before, but then where am I going to go? Well, the good news is interest rates are projected to stay at a very affordable level. Hopefully my camera won't blow over here. Interest rates are still expected, even despite this inflation that we're seeing, because it's not growing out of the long term. Even though we're seeing this inflationary pressure, a lot of it's transitional. It's transitional because we're coming out of the restrictions. The economy is starting to open back up. We've got these bottlenecks that are causing some of these price inflation. Some of that inflationary pressure is going to be temporary. Where am I going to go? Where am I going to go if I sell my home? Where you're going to go, it depends on how much you need to go. And for those people that need to go, they're going to find a way, and they're going to sell their home. Now, I've actually talked to a lot of home sellers now that own 2 homes. And if they own 2 homes and they don't need to have that second home, that's why they're selling that second home. We've got a lot of investors that own multiple properties that maybe hadn't chosen to sell their home, but now they're going to have that opportunity to do so. So I think that inventory shortage is going to be, it's going to take some time to correct itself. It's going to take time before we see that shift. Remember how I talked about how the inventory curve was way over here? Well, it's going to have to move this way in order for things to kind of normalize, but it doesn't necessarily mean we're going to see a decline in inventories, because the interest rates are going to stay projected in the 3% range despite the inflation. Interest rates are likely to stay low, and we're going to continue to see that type of environment. And as that happens, buyers, as inventory increases, right now we're actually seeing a shift in buyer expectation, because they're so disappointed. Buyers have been pressured out of the market because we got people that are coming in paying cash, paying over asking price, and all these kind of things. This video has turned into be longer than I thought it was going to be, but I guess I had a lot more to talk about. So I hope that you enjoy this. There's more to talk about in terms of what's happening with housing and the economy, and I look forward to sharing more of that with you. I hope the audio turned out on this fairly well, because it's kind of windy and there's some background noise. So for now, stay healthy, enjoy the weather. It's beautiful today, and I hope I hope we'll be able to continue to enjoy this as we're coming out of these COVID restrictions, and I hope that you're enjoying yourself as we're coming out of those COVID restrictions. It's nice to not wear a mask. But again, vaccinations are incredibly important right now. A lot of people, maybe there's been some people that you know as well that don't want to be vaccinated. That's okay. That's up to you. I don't want to make a political statement about vaccinations, but what we're seeing is that if you're vaccinated, you are welcome to enjoy life again out there without having to worry about wearing a mask. It is such a different environment when you can be in a room of people and you don't have to worry about wearing a mask. Should we still worry? Yes, we should still be concerned about our health. So maintain your health, maintain your safety. I look forward to talking to you again, and I have a lot more information to share.